Tuesday's market closes a lower day with the exception of the hog market. Joining us, Brian Grady with Pro Farmer. Brian, a big risk-off day. Recession, weather, they really pummeled the market, didn't they?
Absolutely, just everything basically was under pressure, and I think that that's the big thing right now is that we're seeing this liquidation pressure in mass. We're seeing the funds get out. The path of least resistance is down, and that means sell and kind of ignore everything else, and everything else, to be honest with you, right now is kind of negative as well.
That's right. We had crude oil down almost $10 during this session. I mean, there's just a lot of factors there. What are you watching here? What are the funds watching in terms of some of the key indicators that we are in a recession if we are?
Well, I think you have to look at obviously the macroeconomic picture and things like that. So what we're seeing is the inflation is that genie's kind of out, and we're out of the bottle, and we're seeing prices pull back pretty significantly. But the fear now is that the Fed pushes too hard, even as inflation starts to back down, and then we slow down the economy. And we've already seen indications that we are slowing the economic activity, and then you get into periods of extended recession potentially. So I think that that's really the fear right now.
So funds have bailed out of a lot of their long positions in a lot of the commodity sector. How much more will they liquidate?
Numbers wise, I don't know that, and I can't answer that accurately, I don't think. But I think that we are in for another period here of at least probably a couple more weeks. It's going to take an event at this point in time, whether it's a weather event, whether it's a macroeconomic event, whether something is going to have to tell the funds to flip the switch. And they were aggressive buyers. They flipped to aggressive sellers now in liquidation mode, and something's going to have to flip the switch again to tell them to be buyers. It might be that prices just get cheap enough where they look like a value buy again. It might be some macroeconomic event. It might be some weather event, something like that. But something's going to have to flip the switch.
Yeah, we've lost like $2 on new crop corn and off the highs, and almost $3 off of beans. And so the funds usually push this thing a lot farther than they need to, don't they?
Absolutely, and don't forget the time frame here, because we're coming out of the 4th of July weekend, and historically that's either an acceleration of the current trend, which was down into the weekend, or it's a reversal of trend and trend change there. So I think that clearly now it looks like it's an acceleration of the downtrend that we've had form over the past several weeks here.
So we took out major long-term support in corn, beans, wheat even before that. But last week we took out major support in corn and beans. We got below psychological levels of $6 and $14 today. Where's the next stopping point?
Probably low $5 range on the corn is what I'm probably anticipating that we'll make a run at some point in time here. The logical answer to the soybeans would be 2.5 times that. So you're looking at 12.50 or so, somewhere in that range.
So what about the wheat market? It was the first to turn, and it was the one right now that has actually seen the biggest correction. We're back below levels we were when the war erupted, aren't we?
Absolutely, and seasonalities come into play, and we're going through harvest. We'll push past halfway point on winter wheat harvest, so we should start to see some of that harvest pressure ease up a little bit, but it's still going to be a factor in the coming weeks, and I think that wheat will continue to slide, especially if we see the dollar continue to surge. And keep in mind the wheat market and dollar are most related on the export side of things, and we're already struggling mightily on the wheat exports. So that's something that is a real negative for the wheat market and a real headwind moving forward.
Yeah, a good point you make. The dollar hitting 20-year highs and the relationship to the Brazilian real, to some of the other currencies around the world, is making us non-competitive right now, isn't it?
Yeah, and honestly, wheat wasn't all that competitive to begin with, even with everything that's going on in the Black Sea region and the reduction of shipments there. We were still struggling on the export side of things. If you throw in a much stronger dollar, it just makes it even that much more difficult.
And we'd already heard talk of cancellations of soybeans today and even last Friday, hadn't we?
Absolutely. It sounds like that Brazil's washing out some old crop U.S. soybean purchases and replacing those with Brazilian purchases. Not too much of a surprise, I don't suppose, but still a negative for the marketplace.
What about the cattle market? It certainly has seen a lot of fund liquidation as well there. Do you think that that market can hold in check here because the cash market has been as strong as it has, though?
Yeah, the cash surprisingly is holding us up and providing support. The real concern there is demand, not export demand. Export demand has been strong. It's the domestic demand, and if we are into a recession, what impact that has, and those types of things. It was already a hamburger market. The steaks had priced themselves out for most consumers, and so it's going to be a struggle to find strength when your highest value is the hamburger and your lowest priced of the cuts.
Yeah, and we're seeing that seasonal downturn in demand right now, like we normally do too, don't we?
Absolutely, it's just you get past the 4th of July and until we get to the Labor Day demand about mid-August when the retailers are buying for those features, we just don't see a whole lot of beef demand, and so we are entering that weaker time frame.
So the only thing higher on the day was the hog market. It was to the plus side. And was that just because those nearby contracts are at that discount to the index, or what was going on there today?
Yeah, there's some anticipation there that the cash market is going to turn up. I don't think there's any way that you can argue otherwise on that. Traders see that because really the hog market had no reason to be trading higher. And we actually saw the front month July contract move to a premium. It had been trading at a discount, and they narrowed up the discount in the August contract. So they anticipate that the cash market will strengthen. We haven't seen that here recently. We're 4 days in a row down now in the cash index. But based on the price action on Tuesday, definitely anticipate that there will be some near-term cash strength.
Appreciate your time as always, Brian Grady, Pro Farmer, and that is our closing market.